Welcome to this week's episode of the Scottish Property Podcast. My name is Stephen Clark and joined by always my co-host Nick Ponte. This week we've got a great interview with Mark Stokes who's discussing SSAS pensions. Now this is something that I've been really excited about the last couple of years, been slowly kind of doing my due diligence on, and recently I've just started the process of setting up my SSAS pension. Now, myself and Nick are probably in this mindset as well that, you know, if you're involved in property, you're always going to see, oh no, property's my pension. I don't really need to worry about the future. I'm younger or whatever. But there's so much benefits to having a SSAS pension. And one of them that actually blew my mind a few months ago was I listened to a podcast, and basically it was, if you have a normal pension and you put into it for your 35, 40 years of your corporate employment and you die, your spouse is then given 50% of your pension benefits. Now, if your spouse passes on 6 months, a year, or a short term later, nothing's passed down to your descendants. And it blew my mind. It's like, why the fuck would someone put into a pension for 40 years of their life for their family to benefit from nothing? But when I discovered the benefits of SSAS, the one that appeals to me the most is the fact that it's controlled in a trust. And this trust is set up, it's separate with your estate, set out with your estate, and 100% it gets passed down to your kids. So this is you creating a generational wealth inside a SSAS that will go on for long after you're gone. What was your key takeaways from this interview, Nick? I know that you took huge amounts from it.
Yeah, I mean, like basically, Mark Stokes is brilliant. He really knows his stuff. He's operating at a high level. He talks about the developments, £12 million developments and stuff that he gets involved in. So, and also with the SSAS pension, how he uses it to invest in property. Now, the thing a lot of people say is, oh, well, you can't buy property, you can't buy residential property with a SSAS. You can only buy commercial property. But he opens their eyes up to how, like a lot of people who are buying properties through limited company, for example, how they can get loans from investors who have SSAS pensions and use it to fund renovation deals, that sort of thing. And that is definitely a way that the residential property investors can use it. So there's three main things for me. Legacy, like you said, basically looking out for your loved ones. Control, you take complete control of it rather than having it in some fund and pension fund which is getting invested into the stock market. And we all know how volatile the stock market is at the moment. It's up, down over the past 20 years, like 3% or something like that. It's gone up in the FTSE 100. So if you are well informed about how you can use this stuff, you could be talking about returns of 10% plus. Do you know what I mean? So it's really powerful stuff. Another thing was tax, huge tax savings. So listen to this, guys. Take notes. Listen to it twice if you need to. But here is the interview with Mark Stokes from SSAS Alliance. Hope you enjoy.
Welcome to the Scottish Property Podcast, Mark Stokes. Thanks very much for joining us. We appreciate you joining us. Before we get started on the interview, Mark, could you give the listeners an overview of yourself, your experience, and what got you into SSAS pensions?
Yeah, well, first of all, thank you, Stephen. Thank you, Nick, for having such a great podcast and inviting me on to maybe share some of my experiences. So my background is I spent 25 years in corporate life running businesses on 4 continents, 33 countries. But I made the decision back in 2014 to retire from corporate life. The simple reality hit me quite quickly, to be honest, that I was running 7 different companies and I knew there was going to be an 8th and a 9th. So the more successful I was in corporate life, the less time I was spending with my children. And I've got 4 children and I simply wasn't prepared to allow that to happen any longer. So as I exited corporate life in 2015 to make a multi-generational legacy for my family and for my children, I made a commitment and created a mandate for our family, and that was that we would take control of our personal economy, and that was all aspects. So I'm 51 now. I was 45 when I retired from corporate life, and probably the largest bank account for most people is their pensions, and I tackled that one pretty quickly, to be honest. I'm very big on due diligence, but equally I don't suffer from procrastination. So I did an awful lot of due diligence in a very short period of time, came across SIPs and also SAS. Did a lot of due diligence and worked out that SAS was the right way to go for me. And you know what really hit me very hard, Stephen, was about 4 years ago, as we were setting up, well, 5 years ago actually, as we were setting up our SAS. We just set it up. And there was 4 of us left corporate life at the same time. One of them, one of my best friends, Pete, he suddenly passed away. He was 53 and he had a heart attack on his bike. And as devastating as that was for all of us, his family, his 2-year-old daughter who will never know her father, to add kind of insult to injury, his wife got 50% of his pension. And I took a step back and really made us think, how many people in society have a pension but don't ask that simple question, what happens when I die? And I know that's not exactly an inspiring way to start your great podcast, but it's a sobering thought. Many of us are creating this pension to help our families. And indeed, for many of us, that pension will be slashed in half if we were to pass away prematurely.
I think that's a great point, Mark, and I'll give a little background and introduction on how I came across you, and you've hit the nail on the head. I related to so much. You've got a podcast yourself, SAS Alliance, and a Facebook group page, and I came across the podcast when I was researching SSASs, and yeah, I was the exact same point. I have a corporate pension from my 12 years before I left my corporate life. My wife's got hers, which is still working there, and I thought the same thing. Why not take control of your own generational wealth for your own family, your own microeconomy, so to speak? And it was when I think it was you or your guest had mentioned about your friend sadly passing away, and it hit me, and that was the complete turning point for me when it came to SSASs. Was you can put in your pension for 40 years, you could hand 50% over to your partner and your spouse when you die. If she or he dies 6 months at the back of it, your 40 years of hard-earned savings is gone. Nothing gets passed to your children, and that blew my mind. That instantly just changed it. It was completely a light bulb moment for me that SAS was the way forward.
Yeah.
So thank you for that.
It's so powerful. I spent 25 years in, and I'm not an evangelist. I've come from a very practical engineering background. I know that a SAS isn't right for everybody. But I spent 25 years in a SAS wilderness, if you like, not even knowing the right questions to ask about a SAS. My pension statement arrived on the doormat once a year, and I looked at it for 5 minutes, and that looks a bit poor. Hopefully it'll be better next year. And that was pretty much my pension strategy.
Let's just assume that there are a lot of people like that then that don't know about SAS pensions, and let's just start with the basics then. If you can just explain what one is, please, and what it stands for.
Yeah, so a SAS is a small self-administered pension scheme. Okay, so it's a pension scheme. You can have up to 11 trustees. Many people just have one themselves. We have 4 trustees, myself, my business partner of 20 years, Nigel, and our respective wives. And once you have a pension, which is a SAS pension, it's set up, you need approval from HMRC. So one of the qualifying criteria is you need a sponsoring company. I'll come on to how much money you need to start up a SAS and things like that in a little while. But once you have a SAS set up, you're a trustee. Okay, it's held in trust. You're a trustee. You have a bank account, and then you have the license to operate that SAS. And you can do an incredibly amount of diverse investment strategies. Many people are interested in property, and obviously the word property is in your podcast. So I'm taking many people will be interested in that. But imagine where you're making the decisions. It's an extremely accountable strategy. If you do nothing, your SAS is going to stay in your bank account and rot away at 0.1% interest, whatever the current rate is. But let's look at the positive things you can do. You can acquire commercial property. So you can buy commercial property in your SAS. and create a yield. Enjoy the capital growth, all in a very tax-sheltered, tax-efficient environment. You can loan money to other people. You can loan money to your own business, your own sponsoring company. You can invest in the stock market. So you can do pretty much, we can do everything a SIP can do, but you own the SSAS. It's your SSAS. You take responsibility. You make the investment decisions. Many people will have a corporate trustee of one form or another to help them with any compliance and governance matters. But talk about having your hands on the steering wheel, being able to operate and giving yourself so many different options. And we love that. I mean, we do an awful lot of property, a lot of very small, buy-to-lets, and a lot of very big developments up to 20 million GDV. And we work very collaboratively with our SSAS and with other people's SSAS time and time and time again.
What was your background in investments and property before you started the SSAS, and how did that kind of benefit from using the SSAS immediately, if you know what I mean? Like
Yeah. So way back when, I can feel that Hovis music entering in stage right. I did my degree in construction, so I'm an engineer. I left corporate life. I left my degree in Sheffield actually in 1992, and then I spent years running large, heavy infrastructure projects. That's power stations, locks, dams. Data centers around the world. So I've always been involved in real estate construction. When I mean data centers, I'm talking about the fiber optic networks. I'm talking about finding the building, developing the building, securing the right planning and permissions. I also started to build my own portfolio as well. But if I'm totally honest, cut me in half and I would bleed the company. I only had two employers over 25, 26 years of corporate life. But I probably had 40, 50, 60 roles there. I was a leader of many organizations and ran teams of many hundreds, if not thousands. So I didn't have a huge amount of time. And I knew and recognized that when I left corporate life, that had to change. So I moved very quickly over the last 5 or 6 years to build up a very strong asset base. So between us in Equa Group, amongst our operating businesses and us as individuals, we've got around about 160, 170 buy-to-lets and probably 150 odd HMOs, HMO rooms, I should say. And we will hold this year around about another 100 apartments.
Wow, that's a significant size of portfolio. That, yeah.
Yeah, it's but we operate.
This is something you use to SSAS the fund.
Sorry, beg your pardon, Stephen.
Sorry, Mark. I said sorry. Is this something you've used your SSAS pension fund to fund these investments?
Yeah, we do our large developments, which might be 5, 10, 15, 20 million GDV. We keep the funding structure very vanilla, very simple. I want to attract low cost of debt from the banks. So the investment structure is senior debt and then private investor capital, either on a profit share basis, but typically now on a fixed interest basis. So that would be our typical structure. Our private investors would be self-certified high net worth individuals. That could be as individuals, could be through their limited company, and could also be through SSAS trusts as well. So that's certainly a level of collaboration that we have. On the smaller developments that we do, we use our SSAS. We acquire typically mixed use properties, smaller mixed-use properties. I live in Surrey, so we operate around the home counties. The mixed-use, I've got a couple as examples. One would be 5 commercial units, and we then got full planning permission on a conditional basis for 3 apartments above. Now, one thing just for everybody to be aware of is you cannot own residential property in your SSAS. In fact, you can never, end up owning residential. And when I say that, imagine if I was to loan you some funds from my SSAS and I was to take a first charge security on one of your unencumbered houses and you defaulted, then I technically could end up owning one of your residential houses by default. So there's lots of mechanisms we need to put in place, but it's certainly very, very agile. So we use our SSAS to help fund some of our developments. We will help it fund some of the development phases. We will hold the commercial in our SSAS. We'll hold the residential outside of our SSAS. We've just secured a land deal for 9 new build houses. That won't involve our SSAS at all in the acquisition and construction. But the proceeds, that we're holding these for forever. So the proceeds, the monthly yield, will be put into our SSAS as pension contributions from our company.
And there's a huge tax benefit from pension contributions into SSAS pensions, isn't there?
Yeah, it's tax-free.
How much can you put in tax-free per annum?
Well, the usual rules apply through HMRC, so it's up to £40,000 each, and this comes per trustee. Yeah, right. So we've got 4 trustees. Yeah, so we could put in £160,000 tax-free into our SSAS just in terms of contributions, and that's quite an interesting question. When one of the questions that I'm frequently asked is, how much money do you need to set up a SSAS? Well, the reality is there are no limits, no upper limits or lower limits. On an upper limit, you need to be aware of lifetime allowance, but you need to be aware of that in any form of pension. Lower limit, technically it could be 0. And I do know people who have set up a SSAS with no funds whatsoever.
I think the question that I was thinking was more along the lines of, so at what point does it become kind of, efficient almost, because obviously you have costs involved. So if you're just putting £10,000 in, you talked about loaning that out. And if you're getting, say, 10% on £10,000, but your administration costs are £2,000, then really it doesn't make sense. So, there's got to be a kind of minimum, I would say, probably, to make it effective.
Yeah, and I think you're absolutely right there. It's an individual case for everybody, and I'm not an advisor here. I don't set people's SSASs up. I've nothing to gain or lose here. Just sharing the wisdom of my years, I guess. So what we see is, in terms of setup costs, I think there'll be a range of, depends on how many trustees, how many pensions each trustee has got, the type of mandate, the all-important mandate that they're asking their scheme administrator, practitioner, or a corporate trustee to operate. But you're probably looking at setup costs of anywhere from £1,500 to £3,000 setup costs, and then something of the order of £750 to £1,500 a year, maintenance costs, run rate costs.
And would that be regardless of whether you do anything with it or not? So, you need to be active in this, don't you? Otherwise, it's just going to kind of start eroding your pot.
Exactly. Yeah, it's very accountable. You've got to do something with it. Just putting in a bank account isn't an option. I know some people who just put it in a SSAS and then put all their funds into a diversified portfolio of stocks, shares, and trackers. Some might hedge with gold, bullion grade gold. So that's an option too. I know other people who have maybe sold their business or maybe exited corporate life a few years ago, maybe have a pension but haven't put any contributions in recently. So you imagine life partners, let's say a husband and wife. They've got pensions, but they haven't put any contributions in for the last few years. You can have 3 years back contributions into your SSAS, £40,000 each. That's £120,000 each. Times 2 people, that's £240,000 of contributions into your SSAS. So even if you transferred 0 pension, if you had the liquidity to do so, you could put in There's a couple, 240,000 the moment you set up your
Could
SAS.
that just be like savings or something that you could have? Like
Savings, it could be contributions from your company.
Right.
Your company might have retained profits. Now, retained profits would be net of corporation tax. But if you made pension contributions, pension contributions are tax-free. So if you put pension contributions in from retained profits, potentially you could be looking at a corporation tax rebate. There is something called a general unallocated fund, which you can actually put in up to £500,000 tax-free into your SAS.
Wow.
Now, I've written a chapter on that in my book on SAS pensions, but it was starting to get into a different layer of complexity here. But those that want to be the artful students of taking control of their personal economy, they'll soon realize that there's only one thing in life that's certain, and that's death. The old death and taxes. If you've got the knowledge there and you do it in an ethical way, there's a lot you can learn about tax efficiency. And I think there's a lot that should be learned. And we were talking before we came on air about children and family. And my other mandate to my family and to myself when I left corporate life was not just to create a legacy for my family, but to create the custodianship for my family. If you imagine the analogy of how lottery winners might get a lot of money, and sometimes it can just lead them to rack and ruin. Yeah. Well, likewise, I didn't want my legacy to lead my family to rack and ruin. So I'm using our SAS and our businesses as an education tool to increase that legacy. There's nothing more satisfying than having your children on the journey with you. All of our children from the age of 6 or 7 are shareholders in our company because it's tax efficient to do so. The elder ones are paid salaries.
Could that be subject to inheritance tax, a SAS?
No.
So that's another kind of reason to almost hold assets within.
Exactly. It's all part of your overall tax planning. And we do a lot of tax planning. I think the challenge many people will find, and this is why we created SAS Alliance, to create a community that people can understand what are the informed questions that they need to be asking. What we want to reduce the amount of unknown unknowns. They're traditionally, you could have had a SAS back in 1973. That's the earliest you could have had a SAS when the regulations came in. Now, I know several people who have had SASs in their family, from one in 1978, one in 1988, but fair to say that it's not mainstream at all. In fact, it's quite niche. And in fact, before I wrote my book and did my due diligence on it a few years ago, there was very few websites, no community, no books, and you just had to find this from snippets and sound bites on the web or in a library. It's pretty hard. But now it's becoming a little bit more, better understood, and people have got the right armed with the right questions to ask. It really is opening out a whole new world for people to acknowledge the potential power of what they've got well and truly before their retirement age.
I'm just I'm amazed, and the questions that were racking up in my head on the tax benefits there were brilliant there. Thanks for that, Mark. Can I take you back to a question I had on the tax-free contributions you make? It's £40,000 per trustee, but if you have assets in the SAS that also pay your rental income, is that tax-free income as well? But is that off your contributions, or is that separate altogether?
Separate altogether and tax-free. Wow.
So your SAS could grow exponentially if you had profits in your company, commercial investments that were bringing in an income. It could grow massive very quickly.
Huge, absolutely huge. Just the compounding. The power of compounding is awesome, but the compounding of just tax savings, and it goes further. What it does, it creates a moral compass bearing, a code of ethics to operate in. If you look at the taxation levels that we can have, so my principal area of taxation would be income tax and corporation tax as an example. So remember what I said before, there's only one thing certain in life, and that's death. So I've got an income tax bill and I've got a corporation tax bill. What if I got out my hunting license and put the crosshairs on commercial property and went and acquired commercial property and put them in a tax efficient structure that enabled me to offset my income tax or corporation tax with capital allowances? So not only do I get the yield from the commercial property, but also I get capital allowances, which are a pound for pound tax offset from income tax if I hold the commercial property in an LLP, or a pound for pound tax offset of corporation tax if I hold them in a limited company. So we never find property for our SSAS. We never find property for our SSAS. And you might be a little surprised to hear that. What we do is we find great property that works. The deals work. We use our EquiDA analyzer. It's in version 59 at the moment. So, we analyze things extensively, and that system evolves, but we find great deals that work. And once we've found the deals and we've got control of the deals, then we interrogate them and look at what is the most tax efficient structure to put them in. And that won't always be the SSAS. Sometimes it doesn't involve the SSAS at all. It's finding the right structure that serves the stakeholders and the shareholders to the most effective use.
See, just in a practical context, right? So, like, just to put it in a case study, like you said, you came out of the corporate world with the pension. Like, what are the steps that you need to do to actually get that pension, which should probably be like, the company pension, which is probably invested in the stock market, presumably, usually, isn't it? And it's in some sort of fund or something like that. Can you just give us a brief kind of like, how do you get that physically from inside that into the SSAS?
Yeah. So let's assume you've done all your research and you want to make a start. So you would get in contact with an IFA who you truly understood about SSAS. You would get in contact with 3 SSAS providers, in my humble opinion. And maybe you'd ask that question within SSAS Alliance or community like that and ask who could set up a SSAS for me.
Is that important to do your due diligence in that? I presume there will be some, as in all industries, there's always kind of like good and bad.
Yeah. And I have a phrase, ask the tough questions in the good times, but many of us don't know the tough questions to ask. So again, what questions should I ask? Who should I ask those questions to? Put it out to tender, if you like, an informal tender. You're going to speak to 3 people, ask them the questions. But what you need to know before you look at a SSAS is you need to understand what part a SSAS will play in your personal economic equation. What are you going to do with it? What's the strategy? Because there are certain trustees which will have varying mandates. So for instance, if you have very little time and your strategy is like, I'm just going to loan my SSAS out to other people and get a fixed return. That's my strategy. Nothing wrong with that. A lot of people do that. They diversify and might chunk it up into never investing more than 20 or 25%. So that's their strategy. But what if you then engaged a corporate trustee that wouldn't allow you to do that? Or would only allow you to loan to companies that are 3 or 5 years.
Yeah, that's going to be useless. So yeah,
it's going to be useless. So you need your corporate trustee to keep you safe and compliant, great governance, but they're there to enable your strategy, not to disable your strategy. So that would be a great example where you've got to understand what your strategy is likely to be. Yeah. Ask lots of questions. You've got to understand what a SSAS is capable of doing, what it can't do. And there are very few things it can't do. but also understand what other mechanisms you've got outside of your SSAS, limited companies and things. Once you've then engaged an IFA, engaged a trustee of your choice, then you would put the application in through your corporate trustee to HMRC. And that might take you a few weeks to put that together with your corporate trustee. They will advise if you can. So there are certain protected pensions, non-funded pensions. So that might be the Ministry of Defence, could be NHS. Bearing in mind, you don't actually need a pension to set up a SSAS, but we're assuming here that people would be using their SSAS, their pensions to contribute. So they would do that due diligence. We're seeing a lot of people using SSAS with their defined contribution schemes, but defined benefit schemes, final salary pension schemes are getting very hard to do. It's becoming tougher, definitely possible, but tougher and tougher to do. So you would put your application into HMRC, take 2 or 3 weeks. The application may take somewhere in the region of 3 to 6 weeks to be approved. Once it's approved, you will have already got your cash equivalent transfer value, CETV, from your respective pensions. Then you would contact your pension companies and start the transfer process of those funds going across. Some pension schemes are very forthcoming with that. Others seem to be very resistant to that. And that process could take anywhere from 1 to 6 months. I would say 2 to 3 months would be a fairly efficient process. It could take longer. And then your bank account would have been set up and your funds would be transferred into your bank account. So that's the process. I think you can expect, the thick end of 6 months really for that to be set up for most people. And then you're in business.
Cool. I think one of the big things that a lot of people seem to think with pensions is, especially kind of younger generations, it's like a lot of people just perceive pensions to be like an old person's thing. Do you know what I mean? So like, you don't really get access to a pension until I think it's 55. They said you can take out 25% of your pension tax free or something like that. So, tell people a little bit about it. It's not really about age here.
No, it isn't. And the youngest person I know who's got a SSAS got it when they were 18. I know somebody else at 19. And I wrote a book some years ago called, a year or so ago, called Advice to Your Younger Self. And it's very difficult to put into the mind of teenagers that, they won't be that age forever. How are you going to think about retiring by the time you're in your mid-30s or late 30s? They've still got 20 years to go. So understanding the compounding, the great habits, if I knew then what I knew now, it'd be incredible. So that's why I wrote that book. And I think more and more people are understanding that they have got these type of options. Now, as I said, a SSAS is not right for everybody, but understanding what a SSAS is leads you to that type of thinking where everything is in your control, should you wish it. Everything can be. Now, for some people, they maybe haven't got the bandwidth or the acumen to take control of everything. But if you look at the cost base of pensions, if you look at the type of investment strategy, it's a bit of kind of know thyself, understanding, who you are, interrogating what strategy is right for you. And I know for those that have, many hundreds, if not thousands of people who we've seen engage in the process, they've gained something that is far more important than just their pension. It's that ethos of understanding what their net worth is, what their economy is, how that interacts with their family, the tax breaks, the tax efficiencies, and everything all follows. But that feeling of being in control is quite something.
Yeah, that certainly is, Mark. I'm going to string on a little question along probably what our listeners are going to be looking for, since most of them are residential property investors. Now, a SSAS can loan back to your limited company for you to carry out either residential investments or developments. Can you explain a little bit on the process on that? Because I believe it's only 50% you can loan back to yourself.
Yeah, so that's exactly right. So a loan back is a loan from your SSAS to your limited company, and that is a priceless gift from HMRC. They allow us to do that, but they allow us to do that with certain prudency in mind. There must be a first charge on that loan. Now, I didn't say a first charge on a property. So the first charge, it could be first charge on a company, on some other assets, on a portfolio of shares, as an example. But let's be realistic. Most people would have that as a first charge on property. Now, I think we know many property investors between us. Most property investors are looking at leverage, so not many people have unencumbered properties. So the potential that this has is infinite, really. I mean, there are so many options. So could one do a loan back on a property that you're actually buying? Let's say if you had a £500,000 pension, SSAS pension, therefore you could do a loan back technically of up to 50% of the fund value. So let's just ignore fees and things like that. Technically, you could do a loan back of £250,000. So if you were buying a property for, say, 150,000, you've got some headroom cover there, debt service cover ratio, that type of loan to value consideration that a bank would. And you have to treat yourself as a bank. You wear one hat as a SSAS trustee and the other hat as a director of your company.
And what sort of interest rates are you talking about there? Because I think that's a question that pops up, isn't it?
1% above base. Would that be nice?
Ridiculously cheap just now, then.
It's the average of the 4 or 5 main high street banks. So it works out roughly 1% above base, which is pretty much 1.5%, isn't it? But and you have that choice through tax efficiency on where you want the returns. So if you want that at a low cost of borrowing, and therefore you want the returns in your development company, then that's great. Do 1% above base. If you want the returns in your SSAS, you could do that at 10% above base.
Yeah.
So you dictate the interest rate.
You dictate. You're the trustee. Right. As long as you've got fully secured on a first charge basis. Now, there are some considerations with a loan back. A loan back is on capital and interest repayments. So typically it would be over 5 years. So if you loaned, say, £100,000, at the end of year 1, you would have to pay 20,000 back plus the first year's interest back. So let's say £21,000 back. Now you could just do the loan back for 1 year. So that almost becomes irrelevant. It's kind of a 1 year loan back. Yeah. But typically the loan backs would be 3 to 5 years.
Can you give us any? Oh, sorry, mate. On you go, Stephen.
Sorry, can the SSAS pension take security or first charge security over a residential property as well, did you say?
Yes, technically it can. Again, you would need to look at your mandate with your corporate trustee. Remember what I said, a SSAS can never own residential property, and that also means by default as well.
Yeah.
So imagine if your limited company didn't pay the interest and ultimately the SSAS had to recover. Well, its security is a first charge on a property, so technically it could add. So you would need to think this through carefully. You may put in something called a security trustee, and the security trustee would sit in between, would manage the charge, would liquidate the asset and return to the borrower, to the SSAS, the cash proceeds of the sale. What you'll find in the world out there is sound bites. A lot of people will be giving you sound bites of what you can, what you can't do. Quite often what they mean is, this is what I don't think you can do, and this is what I think you can do. So it's actually finding out from HMRC and the pension regulator what actually is in the art of the possible.
I'm just trying to put this up again, just in the practical situations where people can see how this could work. So like a big buzz thing at the moment is people obviously have set up their limited companies to avoid Section 24 tax. So they're buying properties in their limited companies. A lot of people are buying properties to renovate, increase the value, and then do the refinancing. A lot of people call it the BRRR strategy. Yeah. So is there any space in this kind of strategy, property strategy, because people really love all these kind of strategies that they get taught in courses? Is there any kind of way that a SaaS could fit into that if you were doing that as a strategy?
Absolutely. So if you're doing that strategy, you probably want some private investment.
Yep.
Okay. Could I, as a SaaS trustee, loan you some funds? Now, if I loan, that's not a loan back, that's a loan.
Yeah.
So I could loan to you, Nick, some funds from my SaaS. Don't worry, it's all put out there working hard at the moment, so I haven't. But technically, I could. And you might offer me, let's say, 10% interest rate per annum. And you might give me second charge security or PGs or whatever, but I technically, there is no limit to what I can lend you. I could lend you 100% of my SaaS. Now, I would strongly recommend somebody didn't end up being in such a non-diversified way. But so there's one way. So that's the collaboration, the community with fellow SaaS trustees. And we've got nearly 4,000 SaaS trustees in our SaaS Alliance Facebook community. So you imagine the potential. We did a survey actually of what is the average SaaS trustees fund valuation. And we have people who have got well in excess of £1 million, and we've got people who maybe have £50,000. So we've got a whole range, but we tried to extrapolate the data and work out what the average is. And fairly consistently, that's been in around about £250,000 is the average across the piece. So just think, get your mental calculator out and times £250,000 by 4,000 people. And you're into in excess of 1 billion sterling. And then you look at what the potential is that SaaS trustees can operate. So, why would one want to be in a room with lots of other people who are also looking for money? Why not be in a room with lots of people who have got money?
Yeah.
And it's not necessarily the easiest thing in the world to have money and to look at how to invest that money. And that's a skill that many people need to earn. It sounds like a first world problem, but many people, when they take control of their personal economy and they have, several hundreds of thousands of pounds to then invest, you've got great ideas on what you think you can do, but when it comes down to the gritty reality of doing it, transacting it, you do need to know what you're doing. You do need that education of understanding the structuring. And if I've learned one skill two skills probably over my 30 years in business, one is the ability to raise investor capital, raise funds for whatever you're doing. And the other is the ability to structure things on the way in with the end in mind. And there's never a truer piece said about SaaS.
I suppose that's the disadvantage you just kind of touched on there, Mark, that you are the trustee. So if you don't have the right skill set, knowledge and experience, and you do invest your SaaS into something that doesn't work out, then the buck stops with you, so to speak. If you lose it, it's on you. There's no clawback, there's no comeback. It's your money, you're in control of it. Is that right?
Absolutely. And some would see that as an advantage, some would see it as a disadvantage. I think you have to relate it to the context of where your funds either are at the moment or where they used to be. If they're with with a fund manager, and the fund manager loses the shirt off their back, and therefore, your fund value of your pension reduces, I'm sure they're still going to sleep at night easy. But that's the hands off the steering wheel approach to investing that I never wanted to embrace again.
Yeah.
I've got the confidence to work out what I want to do and seek out my chosen strategies and learn, refine, evolve. And I think potential SSAS trustees who have got that kind of mindset, who are prepared to work damn hard at what they're trying to achieve, with a good dose of humility and evolution, are the ones that really do create phenomenal returns and progression in all things they're trying to achieve.
Mm-hmm. I think, yeah, that was one of the things was the risks. Obviously, you've touched on it there. Where do you think kind of people, you've said you've got 4,000 people in the group and all that. Presumably, it's like our group. There's a lot of people that come on that they're so interested in property investing, or they're so interested in SSASs, but they never actually make that step forward. Is there any other kind of like obstacles or stumbling blocks? Is it to do with mindset or?
Yeah, I think mindset is important. I've seen this through. I've helped many people over the years. I've mentored people since the late 90s, and mindset's incredibly important. My business partner Nigel Green and myself, we're incredibly driven, and our type of mindset is, if we set a goal, if we set an objective, we've already achieved it because we've set it. Yeah. We've just got to work out the mechanics of infilling the bit between the start and the finish, being incredibly resourceful and yet remaining humble means that we're just taking knowledge from all quarters, every experience. Every scar has a value, and there isn't a single deal that we've ever been perfect at. We're not waiting for perfection. We're just gathering that momentum and being that unstoppable force for good. And that's leading us to create a mindset of achieving the creation of shared value. And I've seen this over the years in the construction industries around the world, where, most construction industry systems work on the basis that if I want more, it means you're going to get less. And that's why it's one of the most litigious environments. And I've worked in 33 countries and I've seen them all very, very similar. Whereas when you become a property investor or a developer, when you become a director of a company or a SSAS, you have the opportunity to create your own culture. And I'll give you an example of that. We've done a development recently. In fact, we've just got an airspace additional floor on it. It's about 12 million GDV, so it's quite a large development, about 24,000 square feet. And when we took possession of that building in Crawley in West Sussex, we stripped out around about 1,500 hypodermic needles and lots of drug paraphernalia. It was a real drugs den. The building structure was fine, but inside it was a shocker. Lots of PPE required to clear that building out. Now, we can go all happy clappy and high fives on how we transformed this building from a drugs den to being this beautiful 53 apartments. But the reality is we kicked the can down the road. We moved the problem to another part of Crawley. We said, you're not doing it here, and moved it on. We didn't actually address the societal issues. So we set up a business with David and Richard, another couple of our joint venture partners, called Cornerstone Place. And Cornerstone Place, its target is to create 10 million homeless bed nights. So it's a bit akin to, if you like, carbon offsetting. We can't solve the drug problem in Crawley. I don't have those skills to do that. Mm-hmm. But if we can use our skills in the UK-wide, to take commercial property, funding structures, strong leases to enable the balance sheets of charities who do have the skills to provide safe havens and rehabilitation for people with dependency issues, homeless, drug rehabilitation and the like, and we can provide them safe homes so they can make a restart in their lives. That transcends any amount of return. It creates return on impact investing, and that's what you can achieve when you start drawing together the skills, the acumen, and the resources you've got in limited companies, in your own mind, in your SaaS.
Yeah, definitely. I mean, money's not everything, and obviously, but it can do a lot of good in the world as well if you've got the money, So.
Exactly that. And if you can create the right story, we've raised probably about 23 million of private investor capital over the last 3.5 to 4 years. So
did you say 20? How much?
About 23 million.
Wow.
Work extensively with people who want to understand how do I raise funds for my deal.
Yeah.
And it doesn't start with the deal. It starts with how do you make yourself investable, the story, So I'll help people to grow that story, that confidence, that pipeline of potential investors. But yet I've never asked anybody for any money. Never.
That's awesome. That's awesome.
It doesn't start with that. There's lots of free tips and tricks and things but it starts with relationships. And we do a breakfast webinar every Wednesday morning at 8:00. Call it breakfast webinar. Grab your porridge and a cup of tea, and Nigel and I, 8:00 every Wednesday morning, we just talk about the subjects of the day. We did a 3-parter on raising private capital. Tomorrow we're doing it on structuring your deals. These are all very specific and relevant, whether you've got a SaaS, whether you're looking at raising, £5 million of development finance, or whether you're looking at raising, £50,000 for a, 3-bedroom semi-detached refurbishment.
Mm-hmm. Brilliant.
And can anyone join these, Mark?
Yes, they can. Yeah.
So the Facebook group.
Yeah, if you go to Equa Academy, EQUA Academy Facebook group, there'll be a link in there to register. And there's also, we have a whole load of free resources. So we've got our Equa Academy website. People can join that free. There's probably around about 250 videos. We don't sell knowledge in Equa Academy. Knowledge is static. So have all the knowledge, and then what we do is we help people through mentorship, develop their aspirations.
Cool. We'll put some links to that in the show notes so that everybody knows where to go. Stephen, have you got any more that you want to? Because
Mac, the questions, I'm just going to look through the questions there. There was a couple of questions on the group that would people like to ask you. One was, can a pension be transferred from Malta into a SSAS pension? Overseas pensions.
From Malta?
Overseas,
yeah.
I think that's a very specific one. I know a lot of expats have got SSASs, so yes, pensions can be transferred overseas. I have to say I'm not really up to date on Maltese law, but there's a lot of flexibility, and again, that's where you're going to need strong advice.
Yeah, I think just quick fire here, just to finish off, just in case there are any that you can answer. I've got one here. I heard if you take a loan from a SSAS, you can only take a certain amount in your name, but if you loan it to another company, i.e. in your wife's name, then you can use the whole money with no restrictions. Using this scenario, could my wife loan my property company the money?
Okay, so as a part of that is true. The phrase you need to understand is connected party. So a connected party is somebody who's connected in blood or business. Okay. So if we're all directors and shareholders of a company, we're connected. I cannot loan to you and you cannot loan to me. If you're my brother or sister or husband or wife or civil partner, again, you're connected.
Yeah.
If you're doing a loan back, you can loan up to 50% to your own company.
50%.
If you're loaning to somebody else, you can loan up to 100%. Technically, I'm not sure I ever would, but technically,
Yeah.
the law says that you can. So just be very careful at that. What I would say here is what HMRC have given is a gift. This is a gift to business owners. It's a small self-administered pension because it's to help small business owners here. It doesn't necessarily mean small in quantum. And I liken it to a lush field. Imagine this lush green pasture. There's so much grazing area. This lush pasture we've been given. And what a lot of people do, well, they'll head straight to the boundaries and try and graze in all the stubbly, patchy areas in the shade of the fence and the hedge. And that's where you're going to get unstuck. Can I invest in serviced accommodation? Well, it depends what it is. If it's a hotel or a B&B, yeah, absolutely, they're commercial properties.
Yeah.
If your idea of serviced accommodation is, number 23 Acacia Avenue, and it clearly is a 3-bed semi-detached house, just look at yourself a bit. And I think HMRC are pretty wise to many of these things. But
same with HMOs, isn't it? It's even some people get confused there as well.
I'm just writing it's a 35-year itch I wanted to scratch, becoming an author, and I'm now just about to launch my 5th book, and I think this will be particularly relevant. It'll be over Christmas, and it's called Property and SaaS Secrets. So it's everything you can conceivably think about where SaaS and property can interact together.
That'd be a good one. That'll answer a lot of these questions then. So yeah, no, I think Ryan Waddle here, Stephen, there's a few from him, probably quite straightforward ones to answer. Hang on a wee second. Sorry. So I think we've answered a lot of these in the chat, really, to be honest with you. It's a lot of stuff about costs, the usual stuff. But I think a lot of this stuff could probably be answered in your group as well. If people head over onto the Facebook group. Can you put company profits into your SaaS to migrate corporation tax? I think you did touch on that. But that's another one which I'm interested in because I don't have a pension, right? I'm now 40 years old, but I've got a company that actually has quite a bit of cash sitting in it. So this could be one for me.
Yeah. So you can put your pension contributions in. Up to £40,000 per person. Let me give you a scenario. Imagine if you had £500,000 of £500,000 of retained profits in your business. Now, the fact that they're retained profits means you've already paid your 19% corporation tax.
Yeah.
Now, through a general unallocated fund, you can transfer that 500,000 into your SaaS. But what you've just done is you've turned your retained profits into pension contributions. And I mentioned this earlier on. Pension contributions are tax-free of corporation tax. So you could then apply the inland revenue and get your 19% corporation tax back as tax relief. So, you get
that's amazing.
£100,000 back, and you put £500,000 in your SaaS. Yeah. So, when you start looking at the detail here, depends who you are, whether you want to put any pension into your SaaS. You could set your SaaS up with 0.
Yeah.
You could put £500,000 in from retained profits. You could put your £40,000 a year for you and your business partner and both your wives. Well, there's 480,000 over the last 3 years, and therefore you got £1 million. Now that's clearly going to be quite specific circumstances for some people, but it just shows the very elegant, tactile, and agile flexibility that a SaaS can provide.
Absolutely. No, that's been brilliant. I mean, it's really got me buzzing, actually, this chat. I think there are a couple of things that just generally taken away from it. Well, number one, the control. You're in control of it, right? So unlike investing in a pension fund that goes into into the stocks and shares, where, let's face it, I think I saw a headline in the last 20 years, if you invested in FTSE 100, I think you've got, it's gone up 3% or something like that. Do you know what I mean? So obviously there are risks involved as well. The higher the return, the higher the risk, presumably. But another one thing that you said was you need to start with a clear goal, what you're actually going to do with it. Because if you say, right, I'm going to dump, 100 grand in that, and then you just don't have a plan, then it's just clearly going to be a waste of time. So thanks very much. It's been brilliant.
Thank you, Mark, and I'm glad you've got Nick excited about SaaS pensions as well. I feel like I've been on my own the last few months, getting all excited about this. Now that he's on board, it'll be good conversations we will have as well. And could you share where the listeners can find you? Obviously, your Facebook group as well, and where they can request to join, and obviously your social media links.
Yeah, so if you want to follow me and what I do, follow me on Facebook. You go to our Facebook group, Equa Academy, EQUA Academy. And we've also got our SSAS Alliance, SSAS, SaaS Alliance Facebook group. So you can go to any of those. If you go to the Equa Academy one, that's where you'll find lots of free resources. And that's where we have the link for registering for our regular 8 o'clock breakfast webinar with Mark and Nigel every Wednesday at 8 a.m.
Well, I'll need to get my porridge and my coffee out for that one. I'll definitely be checking that out.
And we answer lots of questions, so it's a very much an informal discussion. An 45-minute sort of sharp pulse to get your heart rate going for the day.
Excellent.
Right. Thank you very much, Mark. I appreciate your time and coming on and joining us on the Scottish Property Podcast.
My absolute pleasure. Thanks, guys.
Thank you. That was brilliant, Mark. Thank you. Okay, guys, I hope you enjoyed that interview with Mark Stokes. I think I'm just kind of struggling for breath here because I'm absolutely blown away with what is possible with a SaaS pension. And I don't know if you're like me, but anytime anyone mentioned the word pension, I just switched off because I thought it was for old people. I thought, do you know what? I've got it all in hand. I'm investing in property here. Property is going to be my pension. So I don't need to know about this stuff. But the amount of tax that you could potentially be saving yourself here is unbelievable. So that as an incentive alone is probably a huge thing to look at. There's loads of different strategies, obviously, that Mark touched on. So, that's something that I'm really going to be looking at. I think the big thing is to know exactly what your goal is, what you're trying to aim to get out of this. What did you think, Stephen?
Yeah, I'm loving that you're excited about this. I've been excited about this for a couple of years, but no one in my kind of immediate network has kind of went down this path of setting up a SaaS as well. So the fact that you've let's let this spark, I'm going to be quite excited to see what you do it as well. And obviously speaking to Mark there, I saw your eyes light up when he was talking about the kind of corporation tax. You can even claim back on profits you've already made in your company. It's brilliant.
Yeah, so I don't even have a pension. And I was thinking, well, I can't get into that. I just thought you had to have a corporate pension to get involved in this. And even that, I've got some money that I'm accumulating in my companies. I can get that into the SaaS, and unbelievable. Yeah. So guys, as always, thanks for listening to the podcast. Really appreciate your support. If you could leave us a review, that'd be much appreciated. Apple podcast review is always the best one to try and get us out to more people. It is quite a difficult kind of to try and leave a review. A lot of people, like if you've got an Android device and stuff like that, people are messaging me saying, how do I leave a review? So obviously just try your best, guys. It'd be much appreciated. Stephen, we've got something coming up. We've got an event.
We have got this month's area and focus for the Scottish Property Podcast Network and kind of live. That is, it's on Monday, the 7th of December. And this month we're focusing on the city of Dundee. So we've got some great guest speakers lined up to discuss all the investment opportunities and give us some case studies in Dundee. So we're looking forward to that.
Tayside, one of the areas, one of the regions that are really doing well, and property prices are really booming there at the moment. So it'd be great to get a bit of insight into that market.
Brilliant. So if you'd like to join us, just find us on Eventbrite, or you'll even find it on the Facebook page and go and register.
Excellent. Thanks for listening as always, guys. Bye for now.
Thanks a lot.